that is security analysis and portfolio management. First, in the first, I think we completed the four sessions. So in the last four sessions, we understand what is the basic difference of the securities. We understand what is the portfolio management. We understand what are the investment revenues, are the options available to the investors to invest these funds. What are the different factors who has the impact on the investments? What are the, we can say, different participants in that process? Okay. Uh, and we also understand the investment process. Okay. And what are the, we can say, important factors that investor needs to keep in mind while doing the investments? All these things in the last three, four sessions we understand. Basically, in the last session, we understand what is the, we can say, fundamental analysis. That means while doing any investment, first the investor need to do the fundamental analysis. Okay, that means he has to analyze the risk and return uh, on his investment. Okay, he choose the different portfolios, different investment avenues. Now, before choosing any investment option, before choosing any investment avenue, first, what investor needs to do, he needs to do some analysis. We can say analysis part. So in analysis, there are the two types of analysis are important before doing the investment. First one is, we can say, fundamental analysis, that we start in the last session and we understand what is the fundamental analysis. Okay, whenever the investors refers the financial statements, okay, and he analyze, we can say, some of the financial parameters of that organizations, of that company, of that sector, okay, and on that in on the basis of that information, he understands that we can say the situation of the organizations is good or bad. If the investment gives him a good return or not. Okay. So that analysis part we covered in the last session, that is the fundamental analysis. So in fundamental analysis, we actually do the two, three types of analysis. That is the, we can say, economical analysis, situational analysis. Okay, so that part we covered. That is what is, we can say, what is the economic analysis. In economic analysis, we actually do the GDP growth analysis, inflation analysis, interest rates. We can say in any country where we are going to invest, then we see the unemployment in any of the nations. So all this part we covered in the last sessions. We also, in fundamental analysis, we also do the industry analysis. That means industry specific analysis. Okay, so in which industry we are going to invest. Uh, Once we decide, then we do the industry analysis. In industry analysis, we actually see, I give you the example that there are the different industries which we can say there are in the economies, like the, we can say, the automobile industry, pharma industry, education industry, we can say the film industry. Okay, so these are, we can say, the banking industry, software industry. So all these are the industries. We can see the different sectors in the economy. So we see the GDP growth of the any industry sector with the actually GDP growth of the nations. On that basis, we know the how the sector grows. Is there any slowdown, or we can say the is the bullish growth in the particular industry. Now we can say we understand the market size, we understand the technological innovations, or we can say the regulatory environment. So all these things we understand in the industry analysis. Okay. We also do the company analysis in fundamental analysis before doing the any investments. So in company analysis, what we do, we understand the what is the financial position of their organization, and where we get that financial position by analyzing the financial statements. Okay. So that's why in the subject of financial reporting, we understand why the we can say the authenticate disclosure or the realistic disclosure of the financial information is we can say is very essential from the point of view of the different stakeholders. Okay, so before doing investment in any of the organizations, first investor needs to do the company analysis. That is, he must know the financial health and the competitive position of that organization into the market. Okay. Uh, to know the financial position, he investor must need to analyze the financial statement first. Okay. So whenever he do the financial statements analysis, he knows the we can say the revenue expenses, or we can say the profit position. Or the we can say the company is in a loss or is in a profit, then he know the assets and liability position, he know the equity position, he know the we can say the cash flow position. So all these positions he the investor knows. Okay. Also from the financial statements, the investors can do the ratio analysis. So in ratio analysis, he can check, we can say the different ratios, that is the return on equity, return on assets, profit margin, okay, to check the liquidity positions. Then investors can calculate the, we can say the, he can check the short-term paying ability of the company. So, so for that he calculate the liquidity also. When we know that the all the companies are taking the loans to expand their businesses. That means he takes some funds on the interest basis. That means they have to pay a monthly income to the individuals or to the banks from where they raise the loan. So in solvency ratio, we check their loan paying capacity in the long run. Okay. So from that also, if the company is having the more loans, they are not capable to pay, we can say the short-term financial obligations they have. That means the company is in a financial, we can say crunch. So we are not going to invest. Any investors don't want to invest in such organizations. They are not having the enough liquidity or their capacity to pay the loan. Okay, so all this part we understand in the fundamental analysis. Okay, now we can say now the next part is we can say we are going to understand what is the technical analysis. So in fundamental analysis, we just analyze. We can say the macroeconomical factors and the macroeconomical factors. Now, what is mean by in macroeconomical factors? We analyze the GDP score. We analyze the inflations. We analyze the overall unemployment. We analyze we can say the average interest rates in the particular economy. Okay, we also analyze the different macroeconomical factors. Okay, that means before doing the investments in any country, in any say industry or the any company, that means we have to analyze all this part. Okay, first we need to analyze the overall economic condition of that particular nation. Okay, is the we can say the overall business condition in that particular nation is good or not. We can say the situation or the economical situation in that country is good or not. As we know that when business grows, whenever there is the good we can say ease of doing environment in that particular economy. Okay, now if the economy is overall is doing great, that means that that particular nation, the particular economy is having a good environment for businesses. But the economy itself is not going well, the GDP growth of the economy is not good, then we can say why the economy is not progress at the good space, because the overall business environment is not good, that we can conclude. Okay, so first we need to in the fundamental analysis, we first need to analyze the economical factor in the particular nations. Okay. After analyzing this all the economical factor, we do the industry specific analysis. In which industry we have the interest of investment. Okay, if I love the software industry, then obviously my interest of investment is in software. But first, before doing the any investment, first I need to know about the, we can say the overall condition in the specific industry. Okay, if I have interest and that's why I invest my hard-earned funds and money into that industry, so I may have the losses in the long run. If I choose the any particular organization, any particular we can say in industry, then first I need to analyze the industry is growing at the same space of GDP or not. Okay, if the specific industry is, we can say, doing progress at we can say, less percentage as compared to the GDP, then we can say the industry is not, we can say, progress or develop at the good space. Then we avoid that industry and we go to the another industry for the investment. Okay, so after doing the economical analysis, we do the industry specific analysis. And whenever we choose the industry, in that specific industry, then we choose the particular companies. Okay, so before doing any investment in the particular industry, we need to we need to check the financial information of that particular company. So for that, we can say we do the company analysis. Okay, so in company analysis, we check the financial statements, analysis financial ratios, or we can say we also we can check the management quality and their track record. How the company's management take the decisions. Okay, if the management is we can say the trustworthy or not. Okay, if no, the management decisions track record is not good, then we can say then we cannot take the reliance on such a company. Okay, so their track record must be we can say good. For example, if I know that Tata Motors management uh, track record is very good. Okay, they take a very good management decisions from last 50 to 100 years. Okay, so that's why the people have the we can say the very good faith in the we can say the investment of the all the companies of the Tata. So we first need to check the how the management works, how the management takes the decisions for last 10 years, 20 years. Okay, if they take the trustworthy decisions or not. So this is one of the part of the fundamental analysis as well. We can also check the business model of the particular organizations. Okay, we also can check the competitive environment, in which competitive environment they are working. Okay, so all this part we understand in the fundamental analysis. Okay, so if we find all things are good, then we can do the we can say the investment in the particular investment. For example, if we find the if we find the all these factors are good, that is, if we do the economic analysis, we found that the GDP is growing at the good space, that is the 7 to 8%. If you know the interest rates are stable, okay, the inflation is in a control of the government and in the central bank. Okay, that also we after doing that economic analysis, then we do the industry analysis. Okay, so if you want to invest in any of the sector like the automobile sector or we can say the electronic sectors or in any of the sector, if you find that the sector is also growing at the same space of the GDP, okay, we also know that the uh, demand and supply in the particular industry is also very good. We also do the company analysis of that particular industry. If we find that the financials are good, their revenues are good, their liquidity position is good, solvency position is good, then we go with the investment. Okay, that means this is, we can say, the result of the fundamental analysis. So we analyze that much of the parameters, and then we take any of the investment, take the decisions. Okay. So all that part we learned in the last sessions. So in this sessions, we are going to understand what is the technical analysis. Okay. So in for fundamental analysis, we only do the analysis part, but in technical analysis, we analyze. We can say. Uh, we can say we analyze this 100 of years data, or the last 50 years data, 20 years data. So whatever the data is available of the any particular company, any particular industry. Okay, so we do the analysis technically. So what is mean by we can say the technical analysis. So in technical analysis, we actually, what we do, we analyze the data with the help of some advanced technical tools like the graphs. Okay, we can say in graphs, we can say with the help of the bar graphs, with the help of we can say the candlesticks analysis. Okay, we can say the line graphs we can draw. Okay, so all these analysis we do is in the technical analysis. So technical analysis tells me the trends of last, that is the price and the volume, that is the price and the demand pattern of the shares of the any particular company for the over a period of time. So that I understand from the technical analysis. So technical analysis, we can say, if you say, if we define the technical analysis, so technical analysis is nothing but the method. We can say it is a methodology for analyzing the historical market data. Okay, that means we check that if government take any of the particular decisions, how the company's financial response to that particular, we can say, decisions. Okay, if the natural calamities were happened at that point of time, how the we can say the financials of the particular company respond. Okay, what is the trend at that time? Okay, we know some of the companies are making the seasonal product. Okay, their sales is in, we can say, peak in the good season, and in some of the season their sales are worst. So we analyze the trends. Okay, what is the trends over a period of time? Okay, so we can say technical analysis, what we do, we analyze the historical market data. Okay, and in that data, what we basically analyze, we can say we primarily analyze the price and volume, that is the sales volume. Okay, and to forecast the future price movement. So based upon that trends, what we get actually uh, is in a graph. Okay, so in line graphs, in candlesticks. Okay, we can say, so we are we know how the trends. Okay, so if they say the line graph is the upper heading, that means the continuously the prices of that particular share is increases. So we can say as time goes, the price also can say further goes upward. So we can predict like this. Okay, so by analyzing the graphs, we can say we analyze the, say, we can say the 100 years data at the same time. Okay, so if we do not, we can say, draw the graphs, okay, the bar graphs, line charts. So we cannot draw this. We cannot able to analyze the years of data at the same time. Okay, so we can easily compare the data in the graphs. We can easily, we can say the predict how the price fluctuates in the particular situations. Okay, so we can make the statements if we do the technical analysis, and from that we can say the predictions. The investors can invest his amount of money in the market. Okay, So that is nothing but a technical analysis. In technical analysis, we focuses on the patterns. Okay, what is the pattern of the price and the volume. If we also focuses on the trends, okay, we also focuses on the market psychology rather than the company fundamentals. Okay, we in technical analysis, we can say we cannot only depends upon the financial parameters which we see in the financial statements. Okay, in some of the cases that the some of the companies are facing a losses, but we can say their product and their customer base, okay, their growth is good in the future. Okay, in some of the companies, like we know the some of the UPI companies like the phone pays, okay, they are currently is in a, they are not generating the profit. Okay, so they doing the business in the loss. But what we see that the prices of their shares is continuously rises because the people know that the future of the payment is, we can say, the that is the UPI, that is the Unified Payment Interface. So the investor knows that the company is, we can say, not generating the profit today. They generating, we can say, they are doing the business in loss, but they know the future of this business is bright. Okay, so in such a conditions, we can say, actually the technical analysis, analytical decisions is more on the pattern based or the trend based decisions. What we see in the patterns and the trends, on that basis, the or we can say the investors taking the decisions rather than, we can say, the company fundamentals that we do in the fundamental analysis. So the technical analysis, we can say, it's the root stretch back centuries from the 17th centuries. We can say it is not the case that we are doing the technical analysis recently. Okay, so one of the, we can say, one of the Japanese rice traders who developed the candlestick charting. Okay, so that means that from the 17th or the 18th centuries, actually we are doing this technical analysis part. Okay, so here are some of the core principles of the fundamental analysis. Why we do the fundamental analysis? Because we know, we heard the statements in the English that the history repeats itself. That means we can say we always, what we found, that is the pattern on the trends continuously follow. Okay, so what we found in the trends and patterns, so what we predict, the same thing will be happen in the future. That means the history repeats itself. So that's why it is the core principle of the technical analysis. And on that basis only we can do the investment. Okay, so the chart patterns recur due to the consistent market psychology and human behavior in the similar situations. That means the technical analysis tells us the psychology of the investors. Okay, uh, so if you find that the prices is rises over a period of time, that means the other investors have interest in that company, in that industry. That means in futures also a lot of funds, lots of investments will come. Okay, so the growth potential of that particular company and the industry is more. Okay, so we can take the chance. So on the basis of the pattern and the investments, the investors can invest in such a type of organization, in such a type of company. Okay, so the price moves in a trend. So um, we know that these once one investor invests in a one organization, because we know that the all the investors are not good in the fundamental analysis. Some of the investor follows the trend. Okay, uh, if I tell if my friends told me that this organization is good, Okay, so I can blindly invest in this organization. Okay, if today I told you guys that please invest in that organization that gives you the good return in the future. Okay, so such a type of behavior of the investors makes the trends and patterns. Okay, we know that one of uh, such a, such a organizations, okay, which are we can say well established, they are having the good business, so automatically the pattern and trends of such organizations shares are you can say good, that is the upward movement. So the price and we can say the trends uh, moves upward for some of the organization, and that same patterns follow in the future. Okay, so all these are the core principles of the technical analysis. Okay, so there is a one theory in the technical investment, that is the Dow theory. It is the we can say foundation of the trend analysis. So what this theory tells, okay, so we have some of the options to do the technical analysis. To, we can say draw a graphs to draw the pattern. So Dow theory what tells to us, that is that whenever we do the long term bull or the bear market analysis for more than 4 to 10 years, so that we can say that is the prime trend. That is whenever do the long term we can say bull or the bear market, when we analyze the data for the more than the 4 to 5 years, then that trends we call as the primary trends. In we can say we can check the price movement with the volume of sales from last we can say 11 months or the 12 months. Okay, so in current situation, in current scenario, how there is the price movement in the shares. Okay, so we can do that part. So that means we can analyze the price movement with the sales from weeks to months. Okay, so that we also can analyze. So that called as the secondary movements. And we can say we know that the some of the investors, actually we can say the speculators, and we can say the investors who invest in we can say uh, uh, gambling, such a type of investor do these two analysis, that is the secondary movements and the tertiary move. We know that the some of the examples who make their investment in the intraday trading. You might have heard that word, that is the intraday trading. That means first you have to daily you have to take the position. Okay, you have to take the position, that is the we can say the call position or the put position. You can invest in the call option, put options. Okay, so you might have heard that word, or otherwise after I think in the next few sessions I will told you that part also. So whenever the investors is doing the analysis on the daily basis, how the prices of the any particular shares of the any companies moves. So that analysis we called as the daily fluctuations analysis. Okay, so that part are analyzed by the investors while doing the intraday trading. That means the daily trading. Okay, so you have to take the positions. So we buy something and we sell something in the same market. Okay, we buy the shares on some prices and we take the position at the end of the day. I'll sell the shares on this prices. So we can say it is a very volatile market. That is, intraday trading is a volatile market, very risky market. Okay, so you may earn the high profit in the intraday trading, but you may have the huge losses if the market is not goes with your expectation. So that's the we can say the Dow theory tells us. Actually, the Dow, if we see here, the history is given of the Dow theory, that is the Charles Dow early 19th work continues to influence the technical analysis and methodologies today that we are using today, the different methodologies, the different graphs, we can say the presenting, all that part actually done by the Daw, that is the Charles Daw first time, and he provides the structural framework for understanding the market trends. Okay, that means the Charles Daw is the person who puts the financial information which is available for over a period of time for any particular organizations into the graphs. Okay, he tells the investors how the trends and the pattern analyze easily with the help of the graphical representations. Okay, so that part tells by the Charles Daw in the technical analysis. So we can say the essential tools of the technical analysis, we actually understand how we practically do the technical analysis. Okay, so that part we understand in the sessions. So technical analysis employ a we can say diverse toolkit to identify the patterns. We can say they measure the momentum. What we do, technical analysis, we can say we use the different tools, different techniques. Okay, and for what we are using the different tools and techniques to measure the momentum. To measure, we can say the price. We can say how the price momentum goes. That is upward or downward, or we analyze the. You can say what is the trends, what is the pattern in the particular situation. So that we understand all these things from the uh, in a technical analysis. What are the tools we use? Okay, so first we use the chart patterns and indicators. Okay, so we use the different charts that we see. If you see in the diagram, so we see the different charts. Okay, in upper side you see the line graphs. Okay, for over a period of time, what do you see? We see how the price moments, momentum trends or the pattern is there. Okay, we see we can say initially the price goes up for a small period of time, then it goes down, then it goes upside, then it goes down, then it goes upside, then it goes down, then again he goes up. So we see, we can say in the peak of the business or in the boom situation, the price goes up, and we can say whenever there is the uh, bearish market, then we can say the prices goes down. Okay, but it continuously we can say it is the we can say the upward trend, upward pattern. That means in the we can say the initially the price is less, but in the next in the we can say in the second downward trend, the price is little but more as compared to the initial lowest price. That means the we saw that trend in the chart pattern. Okay, we actually understand all these things, that is the head and shoulder. So in head, what we analyze uh, in the head, what we do, the I show you the things, that is the yeah, actually the here we don't have the diagram, so to show you. So in next part, I'll show you the any specific diagram. The head and shoulders actually are the what the pattern signalize, that is the potential reversal from the bullish to the bearish trends. Okay, uh, and also that head and we can say the shoulder information is which we can say there are the two there are actually the three we can say the concepts is there, that is the central peak, head, and the shoulders. Okay, so the head and shoulder pattern what shows, they shows we can say uh, they suggest the reversal from the bearish to bullish trends, and they we can say this chart is, we can say, is shows the that is the entry and exit points for trading. Okay, so when we need to take the entry. Okay, so these graphs, if we analyze that graph, that graph shows us that after a peak, you must take the exit from that shares, because there is always we can say the after one bullish, there is always the bearish signal. That means after increasing the certain prices for the particular share, there is always it is followed by the we can say the downward trends or the downward pattern. That means after the peak, after once the prices are decreases, you have to take the exit from that share. And once the prices gets lower, then you can buy the shares, and you can sell it when the prices are increases. So you can take the advantage of this price movement. So this is actually a speculation. Actually, we know there are the three types of, we can say, by using the three types, you can earn the return. We know the investment, speculation, and the gambling. So investment is, we can say, it is the safest investments in which we analyze all these things. In speculations, so what speculator do? A speculator take the advantage of the price movements for the two different markets or for the over a period of time. So in these situations, what the speculators do, they analyze the line graphs, they analyze what is the head and shoulders uh, that signals the bear, we can say the bearish and the bullish market. So on that basis, he takes the decisions. Okay. The next one is the double top and the bottom. So that also shows, we can see the reversal pattern, the moving averages. Okay, so we can see in moving averages, we check how the average price of the shares moves over a period of time, so that we understand all these things. Okay, so we can say that we understand. So next we do the volume analysis. That means what are the what is the we can say the volume of sales. Okay, we do the volume analysis, and why volume analysis matters. First, we understand that that is the confirm the strength of the price movement. Okay, so what are the, we can say, the volume of the shares of that particular company that confirms the price movement. High volume on the, we can say, breakdown signals the convictions. Low volume during the price advantage suggests the weakness. Volume profile reveals where the trading activity concentrate, and the divergence between the price and volume can signal the reversal. Okay, we understand, we know that the price of any particular things is depend upon the, I already told you that is the law of demand. What law of demand says, that is the price and we can say the volume of purchases depend upon the price, and we can say whenever there is, we can say, the prices are goes upward, the demand for the particular goods and services gets decreases. Okay, so same we can say that is the low volume during the price advantage, this suggests weaknesses. Okay, if the volumes are low during the price advance, okay, so we can say it is the weakness for the organization. So now, what are the after doing, we can say, the different graphs, that is the candlestick, line graphs, pie charts. So now there are some modern technical platforms also which now available for the different investors. That is now we can use the financial informations, and we can put the financial information directly into the AI, that is different artificial intelligence tools which are available to the investors, and he can generate the different patterns, different graphs. Okay, so first one is, we can say, the trend spider. Okay, it is the AI powered pattern recognitions. Okay, multi time frame analysis. That means that we can put we can say over a period of times data, that is the 50 years data, up to the 50 years data, or we can say the data which is available for a particular over a period of time. It may be a 10 years, 20 years, 30 years, whatever a data which is available, we can put directly into that AI and we generate the pattern. Here in the image, we we can say you can analyze that part. Okay, you can analyze all these things. So next we can say the Active Trader Pro, that is the customizable charts with the 60 plus indicators and the real-time alerts. So all the, or we can say the things stream is one of the modern technical tool is available. That is, it is the user-friendly tool for the, we can say the trade lines, moving averages, volume studies, and the custom indicators. So we can all actually these tools is these are the advanced tools. So what investor need to do? He can just put the financial information and he gets the we can say the graphs. Actually, he gets the we can say the automatic technical analysis, and he just had to analyze. Okay, he no need to prepare the complicated graphs in that. He just need to we can say analyze all these things, and he can then we can say understands the what is he need to do with his funds. Now, next one is we can say what is the difference between fundamental analysis and technical analysis. So in fundamental, so we can say what is the basic difference that we are going to understand. That is, we know in fundamental analysis what we do, that we understand in technical analysis. We actually in fundamental analysis we understand the different financial informations. In technical analysis, we just follow the trends and patterns. So on that trends and patterns, we take the different decisions. So we understand the what is the basic difference, because we all know that these two are the major schools of the market analysis. Okay, that gives the investors the capacity to take the decisions. He gives the we can say the information to take the investment decisions to the investors. So we know the fundamental analysis overview. We already we understand this the fundamental analysis. What we do, we analyze the we can say the different we can say the financial informations of the organizations, in which we do the we all I already told you in fundamental analysis we do the three types of analysis. First one is the economic analysis. Okay, next one is we can say the industry analysis, then company analysis. So here there are we can say in company financials we examine the earnings. Is the company is generating revenue, or how much revenue they are generating, how much expenses they have, then how much profit, gross profit, operating profit, net profit are they are generating. Okay, we understand the economic context, that is we do the economic analysis. We analyze the we can say the economical conditions in the particular market. We analyze the GDP growth rate, we analyze the inflation, we analyze the interest rate. We also analyze the we can say uh, competitive positions. What are the different competitors who compete in the organization in that particular economy? So what are the different competitors to the organization, so that we understand the overall economic conditions. We also we can we also analyze we can say the interest analysis. We do the in the particular industry analysis. Also, it fundamental analysis, we do the intrinsic value analysis. That means that is the we can say intrinsic value is we can say the true value of the shares. Okay, that means in some of the cases that if the manipulations happening in the market, some of the investors they may manipulate the uh, sh- we can say the prices of the shares for their advantage. So in such cases, that the market value of the shares, we can say it is not the true value, because we know that in some of the times the markets adjust itself, and the price of that share comes to the intrinsic value. Uh, so to we can say to reduce the risk, we calculate the intrinsic value. The intrinsic value is, we can say, the theoretical value to identify the undervalue or the overvalue securities. Okay, we know that because of the manipulations, it may case that your prices of the shares may get overvalued or undervalued. Okay, so who does this? We can say the some of the investors who want the great advantage by the manipulation of the uh, market. Okay, some of the cases like the insider tradings, if we know the Harshad Mehta scam, so yeah, Harshad Mehta, what he do the we can say the overvalue the securities. He increases the prices of the some of the shares and take advantage. Okay, so those investors who influenced by this manipulation may uh, have the losses in the future. Okay, but as a smart investors, what we do, we calculate the intrinsic value. In fundamental analysis, typically we support the long-term investment strategies focuses on the business quality and the growth potential. Okay, that means in fundamental analysis is the core analysis. Okay, we do it on the actual financial informations which is available, actual different economical indicators which value is already available. Okay, so for long-term investment, the investor must have to do the fundamental analysis. Okay, so fundamental analysis is very helpful for the long-term investment, not for the short term or the intraday investment. So fundamental analysis, we can say, never helps you in the we can say in the speculation. Okay, so fundamental analysis not help you to take the advantage of the price difference of the shares in the two different markets or over a period of time. Okay, so fundamental analysis actually we do for the long-term investment. So here are the some of the key differences. So technical analysis, in technical analysis, we analyze the patterns. Okay, in technical analysis, we analyze the trends. So technical analysis is actually helps the speculator to take the advantage to earn the highest return. Okay. Uh, so in speculation, speculators take the we can say the advantage of the price movement. So how he knows the pattern, the price movement by doing the technical analysis. So technical analysis by using technical analysis, you can do the speculations and okay. So actually, what is the key difference? We can say first aspect is focus. So we see which analysis focuses on which aspect. So technical analysis, we can say, focuses on the, we can say, the prices and the we can say volume. That means the prices and the market sentiments. That means in technical analysis, actually they primarily focuses on the price and the sales of volume. That's it. Okay. In fundamental analysis, that focuses on the business health and different economical factors. Okay. So, how we know the business health? By analyzing the different financial statements which published by that, we can say, company. Okay. So, by analyzing the financial information, we got to know we can say, business health. Okay, so what is the time frame for the technical analysis? So it is the short to medium term trading. Okay, so in technical analysis, I told you that by using the technical analysis, we can do the intraday trading. That is the daily trading. we can invest for the shorter period of time to get the maximum return. That means we take the position in the market. That means we buy the shares whenever the prices are low, and we sell it after the 6 months whenever the prices are goes up. So technical analysis helps you in the short term and the long term trading, but fundamental analysis helps the investor to do a long term investing, because it is the thorough analysis of all the factors, economical factors, industry factors, the company financials. So fundamental analysis helps to do your the long term investing. What are we can say we understand what are the data sources for technical analysis and what are the data sources for fundamental analysis. So the we can say on the basis of the data available for over a period of time, on that basis technical analysis, we can say the chart, price, volume. It is the data for the technical analysis. Okay, and data should be of the over a period of time. For the long period, the data required for the technical analysis. But in fundamental analysis, if the data is available for the 1 year also as well, we can do the analysis. That is, we can analyze the previous year's financial statements of any company, any organization. We can check the industry reports. We can check the different economical factors of any particular nation for last year. Okay. So that fundamental technical analysis requires the data for longer period of time, but fundamental analysis we can say the financial statements, industry report, and the economical factors. All these we can say are the data sources. Now we can say what are the key questions in technical analysis and what is the key question in the fundamental analysis. So in technical analysis, when to buy or sell, it is the main question, because we follow the trends. Okay, so as per trends, we take the positions in the market. Okay, that means whenever we say that the share securities we are getting at the low prices, then we are in the buy position. Okay, so whenever the prices are goes up, okay, at the maximum level, then we take the sales position. Okay, so in this is the main question in technical analysis: when to buy or when to sell. But in fundamental analysis, what to buy or what to sell. Okay, we in the fundamental analysis we got to know which industry sector is the is the strongest one. Okay, which company is the strongest one to invest? Okay, so what to buy or what to sell, that we got to know from the fundamental analysis. Okay, so this is the key difference, and this key difference is also very important from the exam point of view. Okay, you guys, what I expect you understand is because many of the times the technical analysis, there is a key difference between technical analysis and fundamental analysis, which asked in the examinations. Okay, so while technical analysis can be applied to any tradable assets with the price and data, okay, so we can apply technical analysis whenever the data is available for the longer period of time. And fundamental analysis requires the extensive industry specific knowledge. Okay, so in fundamental analysis, actually, you guys require a deep knowledge of the some of the different subject of the we can say the subject. You must have the knowledge of the economics. You must have the knowledge of the financial management. Okay, you must have the knowledge of the managerial accounting. So then and then only you can able to do the fundamental analysis. But it is not in the case of technical analysis. By using the years of data, that put you if you put that data into the AI, and they automatically you get the trends, pattern chart. So they on that basis you can interpret the different interpretations. Okay. So till if you have any questions, you can ask me, because I think it's already the 6:59. So if you don't have any questions, then we will sum up the sessions over here. Anyone have any question? If you don't have any questions, then we can sum up the sessions over here.